Hello, Oracles. Well, I was torn as to what shirt to wear today because Tesla was green, but the market was red. And since this video is more broad-based on the market, I'm going with red. So my Tesla video, we're going to be green. Finally. So what's going on with the market? So we had Joe Biden today spoke about we're completely banning U.S. no more Russia oil or natural gas coming to the U.S. Completely shut off. The UK has also shut off Russian oil. They do still have natural gas coming over for the time being, though. So that was a huge hit. So, when Joe Biden gave his speech this morning, the market rallied. Pre-market we were green, then we went red. He spoke and we went really green. It was very nice. Energy stocks did well. Tesla soared. Tesla dipped down to 790s and then pulled up to almost 850. Settled around 820. So, that did well. Enph for me did well. So the energy stocks did well. It was kind of a mixed bag. Like I'm looking at my portfolio and it's like, 60% was green, 40% was red, and none of it really jived and made sense. So looking at the whole market overall, I was talking to a couple of you in the comments, and it seems like, we're anticipating perhaps that March pullback that we had anticipated previously before the Russian invasion. The Russian invasion happened, we had that massive pullback, and a lot of people were talking about, well, maybe we're going to forego the dip in March that we were anticipating because of the invasion dip that we had gotten. But now, with oil prices skyrocketing, the US banning Russia oil, all the sanctions put on Russia, oil prices are still going up. So, that is now leading to more inflation fears because when oil prices go up, transportation prices go up, shipping prices go up for everything, and therefore, commodity and retail good prices also go up. Now, this is going to lead to further inflation down the road. As we had spoken about, we have CPI data coming out on Thursday. That CPI data is not going to reflect any of these oil issues going up. Those numbers are all based off of February. April's numbers are really where it's going to hit. So we're sort of still in that bull pennant right now. And so we're trying to see what's going to happen. And again, I think CPI data on Thursday is what's going to determine this. CPI data is expected to be high. We're looking at high 7%. And it's going to be ugly either way, but the market has priced that in. If we go higher than that, I think we're going to see some really ugly numbers coming out of the market. If we come in lower, we might not run strictly because of the fact that we have the FOMC meeting next week, and then we're going to see CPI data in April, and we know those numbers are going to be high. And so I think what's really going to come down to is what is the Fed going to talk about when it comes to inflation going forward? Because going forward, they have a really tough game to play right now. Do they force a recession? Whenever the price of oil has gone over $100, we've gone into a recession. We're not there yet. So are we going to get there because inflation is so high? Oil prices are so high? Is the Fed going to have to force a recession? Lots of uncertainty, lots of questions, which is why the VIX, which is the volatility index, is as high as it is. That there being over 30 is causing the market fluctuations as much as they are. That's why Tesla's swinging from 790s to 850 in the course of a day. You get crazy swings like that, and again, when there's less volume and less money in the market, it's going to swing even more to begin with. There's a lot of money on the sidelines right now just waiting for everything to simmer down and become sort of normal again before that money gets back into the market. And in following the market and Tesla in particular and some of the other stocks, it kind of seems like we're taking steps down in the market. So we step down and then we kind of consolidate for a little while. Then we step down and consolidate for a little while. So it is creating some nice support and resistance levels for when we come back up so we can monitor these later. But in the meantime, we still keep dipping down. How much further down are we going to go? And I think a lot of that has to do with what now is going to be higher inflation than anticipated. So the market's going to have to see CPI data coming out Thursday, and then they're going to project forward and say, all right, where do we think inflation is going to be in a month from now? What is the Fed going to do about this? And then everything will get priced in right away. So it'll be a relatively quick pricing in over a few days, and then we'll find that new level again. So again, we're just going to be patient and wait and find out what's going to happen with that. But I want to be optimistic, but my only optimism is going to come from these are the times where you're going to be able to invest to build your fortune later and create your own S-curve. So how do you create your own S-curve? Well, you invest wisely. You invest in things that are going to grow exponentially over the next decade. So many of you are all in Tesla, and Tesla right now is showing us that they're going to be on at least one, if not four, giant S-curves going forward. So if you're all in on Tesla, and Tesla does what they are planning on doing, then you're already on your own S-curve, and you're good to go. For others like myself who do like to diversify, although I am still almost 60% in Tesla right now, I do like to diversify, and I will have real estate in my portfolio as well. And so it's about investing in things that are going to be going forward in growth. So take a look at some of the stocks that did well today. Take a look at some of the things that are going on in the entire global environment right now. Kind of use some foresight, see where we're going, see what the trends are. I talked about it the other day, looking at some of the younger generations and what the norm is going to be for them when they become adults. And so looking at like my son who's 15, what is the norm going to look like for him when he comes into the future? When he's working and he's, 30 years old and things like that. What is that generation going to be doing? They're going to be utilizing the metaverse, realistically, almost everywhere. EVs are going to be the norm for them. Running on renewable energy is going to be the norm for them. Cryptocurrency is going to be the norm for them. So these are the things, if you're looking to create your own S-curve in your own portfolio and your wealth, look at the future. You've got to do that. You have to invest in things that are going to be on their own S-curve trajectory. Now, of course, there can be discussions about which cryptocurrencies, what stocks in the metaverse, and throw out to me in the comments what stocks you think and what cryptocurrencies you think are going to do the best over the next 10 years. Those are the places you're going to want to put your money to exponentially grow your wealth. And that's what I'm looking at myself. And that's why I've got my stocks that I'm investing in. And so for me, some of the stocks in crypto that I'm investing in now are Tesla, of course, Enph, Sofi, Square, Nvda, Googl. Vin actually over at Investment Club made a great video about Nvda, and I thought about it, and they're in a lot of different variations of all of these areas that we're looking at. They're creating chips for the metaverse. They're creating chips for miners for cryptocurrency. They're creating chips for AI for EVs. So Nvidia is going to be a huge player in the future going forward. When it comes to cryptocurrencies, Bitcoin, of course. I've got Ethereum, Dogecoin, Cardano, which is ADA. And so these are the plays that I'm looking at going forward to build my own S-curve. Of course, I still monitor them on a regular basis because you want to make sure their fundamentals are still strong. And there may be some players that we don't even know about that come out of all of this going forward. So these are the areas that I go looking into. And one of the things I have learned from my fitness days is you're going to find the most success when you learn to be comfortable with being uncomfortable. And right now, all of these stocks are extremely uncomfortable to be in. This is the time where you want to put in more effort and invest more money into these stocks. They're beat down. This is the time where you're going to get the best ROI on your money. Can it come down further? Absolutely. Which is why, for me, I'm not investing heavily into them. I'm dollar cost averaging into them. I'm still saving up cash. I sold a couple of things. I sold BEP and a couple of other stocks as well that were some of my losers that barely made a profit. So now I'm back up to 5% cash. And I'm utilizing these, and I've got QYLD as my cash reserve just in case I need some more cash on top of that. And so I want to make sure I have this cash so if we dip down more, I can add more. And I just want to keep on adding because we will come out of this. And when we do, you're going to have a much better return on your investment because you were comfortable investing when things were uncomfortable. And so when it all comes down to it, the best way to create your own S-curve in your wealth is to invest when everybody else is scared and there's pain in the market and you're uncomfortable. When you're uncomfortable, and you invest more then, you are going to see that S-curve climb as we come out of it. And of course, wise investments are also a huge piece of this. So pick the stocks that you see are going to do well and grow on their own S-curve over the next 10 years. And if your risk tolerance is a little bit lower, then you can invest in some things that can also hedge your portfolio. Like for instance, I'm doing real estate. Real estate is a great hedge against this. You can get into some value plays, and then you can get into some other ETFs. You can get into VYM, VIG. Some of these Vanguard ETFs are great to get into. QILD for me is my great dividend ETF that I get into. Let me know in the comments below, what is your strategy for the next 10 years to create your own S-curve in your wealth? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.